Guys, Mike here, head trader at True Trading Group. August 1st, Fed Day, Fed decision unchanged on a rate hike decision. So I didn't raise rates. So today was a little slow, kind of leading into the Fed decision. Days have been kind of slow lately. Last few days, or last couple of weeks, have been a little slower, less volume, less follow through, less continuation. Small cap market's dead. You're getting like just little spikes here and there, just day traders that are running in, just kind of throwing shares back and forth to each other, and the stock just kind of pulls right back in. You're getting very few small caps are giving you continuation. There's really been much better action in mid caps and some larger cap names. And that's where, I spent a couple of days kind of going after a couple small cap stocks, but I really wasn't getting the follow through that I like, and I went back and started focusing on some more larger names like I did today, and I caught a really nice trade in soda. I also opened a swing trade short in Pandora. I'm going to go over these two trades with you guys. The trade in soda is a VWAP lesson, and it is also a lesson about why it's so important to be able to look at longer term and multiple time frames. I use longer time frame charts like the daily chart to develop my idea behind a trade. Like if I'm looking, okay, I want to short something, or I think I want to go long something, and where's going to be my take profit? Where's going to be, I develop the idea usually on a longer time frame chart, and then you use the intraday chart to kind of nail your entry point and get the timing right on the trade. In the example of soda, it's all about the weekly chart. Okay, so let me take you right to the weekly chart right now on soda, and I'll show you what I'm talking about. Here's our weekly chart of soda. You see this huge undeniable uptrend in soda, and then this moment of pullback and consolidation. The reason why I like this moment of pullback and consolidation on the weekly chart, guys, is because it gives the stock it gives the stock time to recharge its battery. It gives it time to regain its footing before its next move higher, so that you can get continuation off a gap up. If soda had done this, let's say all this never happened, right? Forget that moment of consolidation, and you had soda do this. That would be an exhaustion, parabolic like gap type move, and it's very hard when you get a gap up like that for the stock to give you continuation. Usually it'll kind of sell off as profit taking kicks in, as the stock has moved too high too fast, and it's just people it's undeniable human nature, just, oh man, the stock's up so much and so quick, I'm going to take some profits. So it's harder for the stock to give you continuation. That's why you'd much rather see, like soda, a moment of consolidation and pullback before the big gap up to let you know now we can get some continuation and some follow through because the stock had time to rest. Okay. The other thing that I really want to point out to on this soda, which is really why I got behind this trade and I was really confident about this soda this morning. You can see this previous double top area on the weekly chart. And this is a weekly, guys. You got to go back to 2011 and 2013 for this double top. And then as I zoom in here, let's pan this in. As I zoom in, you can see we held above that previous resistance area. So there's your resistance. And during that moment of consolidation, we held above it. That's a real nice, strong sign. That's a sign of strength in soda, holding above that previous resistance. And then bang, we got that big, strong extension gap up move today on earnings. Now let's go to the 3-minute. Here's your big gap up. Okay, we gapped up right here, guys, at 102.15. And I said on that gap up, guys, I think we're going to push a little bit higher. We're going to get follow through in soda today. And it's because the stock had that moment of consolidation on the weekly chart that I was confident that we were going to get continuation. We were going to push, because if we, like I said before, if you don't get that moment of consolidation, it's hard for a stock to give you follow through when you have such a big gap up. Okay, that's why it was better off that it had that several months of consolidation on soda before the big earnings gap up. So now I already have the idea. I'm going to go long soda. That's my idea. Now I need to look at the intraday chart to figure out when's the best time to enter this trade. And let me pan this in so we can get a little bit more zoomed in on the open. Here we open up. I never trade right off the opening bell, so the first couple of minutes stock just goes up, down, and then all of a sudden you see VWAP comes into play. And you can see the stock starts holding VWAP beautifully. Once I saw that, I entered soda long Here's my trade announcements at 9:46. Long tier 1 soda, 104.59. Stop loss 102. I'm going to add tier 2 through 106. So I'm risking down to the low of the day on a tier 1 position. We break through the high. I'm going to add to that position. Let's go back to the chart. Here's my entry point, guys, right here at 104.59. And then I added to this position right here as we broke through 106. Okay, you can see once we broke through that area. Now, you already know VWAP is support. Okay, so here VWAP is showing you it's an area of support. Here's our pullback. Here is another area. We come back down into that VWAP and we hold support again. Okay, then we start to climb and continue our way higher. I start taking profits off, guys, 107.94. Then I sold the bulk of my position at 109.22, and then I got flat at 108. So right here were my, I'll just show you guys, right here were my take profits. Here was the 109.22. And when we couldn't hold the trade line, I got flat right there at 108. Okay, so that's my trade on soda, guys, and it really is all about the weekly chart and identifying, coming up with trade ideas and a concept on a longer time frame and using the intraday chart to nail your entry point. And that's that soda trade. Now we'll go to Pandora, guys. I'm short Pandora. I got a pretty nice sized position from $8. I shorted Pandora right there at $8 after that little strong crack right there. And the reason for this is resistance on the daily chart. Okay, here's our resistance level on the daily chart right here around 835. And you can see all this resistance right in here. We gapped up into the face of that resistance on earnings. The earnings really weren't spectacular. I mean, yeah, they did better than people expected, but they still wasn't a blowout earnings like Apple, which is approaching a $1 trillion market cap, the largest valued company in the world. We put in that tail up there at that resistance level and then sold off all day and closed right near the low of the day. I'm short from $8. I'm looking for a move back down into this gap area. My first take profit is going to be around $7.50, and then I'll look to kind of just ride this down as close to $7 as I can. Okay, it's still in full position. I didn't cover anything today. Short from $8 on Pandora, and I will let you guys know how that trade unfolds. I'll see you guys in chat tomorrow. Take care.